Hey everybody, it's Greg Gossett from Gossett Trading and Mentoring Live, and today is Wednesday, April 24th, 2019, and we are in the last hour of the market. In my opinion, the most important hour of the trading day. So, kind of the lineup for today is first of all, we're going to go ahead and run the legal disclaimer. Second off, we're going to just take a look at the major market indexes, the Dow, the NASDAQ, and the S&P. And then next, we're going to move over to my current positions, why I bought them, and how I'm going to manage them from here on out. And then we're going to go through my watch list and see if we can find any potential setups to purchase at the end of the day. And then lastly, if there are any questions after the market closes, I am very happy to answer those if you have any questions about what I did for the day or if you want me to look at a particular stock. So to start off, we have to start off with the U.S. government required disclaimer. It's about 40 seconds, so please hold tight, and then we'll come right back after that and we'll get going. Okay.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
Okay, thank you for hanging with me through that. So anyway, first of all, let's just take a look at the index here today and just get an idea of what's going on with the market in general. So first off, we have the Dow Jones Industrial. It is finding some resistance up here at the 70 RSI reading at 67, but close to 70, and also the 3 ATR channels. Generally with major market indexes, they have a tough time getting above here. But you know, we have big earnings today. Today is one of the biggest earnings day of the quarter after the close, and so nothing to say that we can't go screaming up after that, but on the other side, there's nothing to say that we can't go down either. You know, even if the earnings are good, they already may be baked into the cake and into the price. And so anyway, but in general, you know, the Dow is hanging here. We're down a little bit today, but we're up against that 70 RSI range and third ATR channels. So I think the market's just going to wait for these earnings today to take its cue. NASDAQ is down a little also today. It was able to close above the third ATR channel, which is stronger than the Dow. We're at 80.09 RSI, which is, you know, extremely historically overbought for an index like this, but who knows? We'll see. Like I said, the earnings today are going to move this in a big way, most likely one way or the other. The S&P, oh, sorry about that. The S&P is, you know, compared to the NASDAQ was above the 30 ATR channel. Right now, this is just barely hugging the third ATR channel. It's a 72.96 RSI. So again, really overbought territory. It doesn't mean it's going to go down. It could go higher, but I think we're just hanging out here waiting to see what happens with earnings. So it should be interesting after the close. Okay, so let's go ahead and take a look at my current positions and see why we got in them and how we're managing them. I did buy Dexcom back on the 18th of April, and I bought Dexcom because we had this previous low. we made a lower low, but as you can see, even though we made a lower low, the MACD bar, see how deep these MACD bars are? You would expect to at this lower low to have these red bars be deep as well. But there are no red bars, which indicates a lack of momentum technically. So I would not have bought Dexcom just based upon this, but the reason I did buy Dexcom was one, this is part of it. This is 1/3 of why I bought it, because we have this double bottom with a bullish divergence, or actually no divergence whatsoever on the MACD. Second of all, this particular bar washed out the previous bar substantially and then rallied back above its close, which is called a V1 entry. And then thirdly, the third reason I bought this was because, you see, this was the previous range. It's hanging in here in the previous range. Then it stabbed down into a new lower range, and then it reversed. So we had three things going on there. We had a lower low with a missing right shoulder or a bullish divergence. Two, we had a V1 trigger where this bar goes lower than this, closes above this high. And third, we closed back into the range, making this a false breakout. So bought it there 114.54. Today it's at 118.53. I bought it at 115.54. I have been phasing. You see how close I got to my profit target today? Didn't quite get there. My profit target was at 120.10. But my trailing stop at this point, now, if it hadn't have gone up, my trailing stop, my initial stop would have just been a close back below into this old range. But because it's moved my way, I want to move my stop to a trailing stop at this point. And if you were on the live stream yesterday, my trailing stop was a close, not intraday, but a close below the 10-day moving average. And we are up today a little bit, but as of right now, I'm going to stick with that plan. A close below the 10-day, I would get out. If we move higher and we close above the 20-day, then I will move my trailing stop to the 20-day. But yeah, unfortunately did not get that profit target, just missed it by probably 8 cents or so. But that's how it goes sometimes. So currently right now with Dexcom, I'm long. I've been phasing out. I phased out of about 30% of this trade so far. But if it closes back below the 10, I'll be out. If it continues to move up, then I'll continue phasing. And if it continues to move up, I will then move my stop to a closer stop. For instance, if I close above the 20, then a close back below the 20 will be my stop, my trailing stop. Or we're at a 43.74 RSI now. The other possibility is if we get above the 50 RSI on the way up and then close back below, that will also be a reason for me to lock in profits. But so far, it's been a good trade. About 3.41%. And I've been in the trade 3 days, so that's a good trade. Okay, SPY. Some of you hear this every day, and I apologize, but in case we have new viewers, I buy the SPY every day at the close. It's my overnight SPY trade, and the reason that I do it is based upon this study from 1993. If you would have bought the SPY on the open and sold at the close each day, so you bought it in the morning, sold it in the afternoon, since 1993, your return would have been a negative 5.2%, right? Unbelievable, because we know that the SPY has moved up from 1993. But if you did the opposite and bought on the close and sold on the open the next day, you would have had a return of 568%, meaning that more than all performance came in after hours trading. It's pretty incredible when you think about it. So I do buy the SPY every day at the close and I sell on the open. You can see yesterday I bought it at 292.93. Today I sold it at 290, 260. So I took a small loss. I take a 10% position size every day on this. So for instance, if I had a $10,000 account, I would buy $1,000 worth of SPY every day at the close, sell it on the open. Just to give you a little bit of back testing on this, you can see I bought here, I sold here for profit. I bought here, I sold here for a loss. I bought here, I sold here for a pretty good loss. Here I bought profit, big profit, close to break even, profit, nice big profit, loss, small profit yesterday, and today very small loss. So I've been doing this for about 39 trading days now, just as an experiment, and it's been working out very well. So it's definitely been profitable. Now, if you look at this chart, there are drawdowns. This is the buying in the morning, selling in the afternoon. This chart here is the buying in the afternoon, selling in the morning. So, I mean, you can see it has definitely moved up nicely, but there are drawdowns. So you always have to be careful with your position sizing and not, purchase too many shares as a percentage of your trading capital. 10% is what I use. Okay, so that SPY, that was, like I said, that was a very small loss, and we'll be buying that again at the end of the day. XLE, okay, XLE did not go our way today. I bought this on April 22nd when we had, see how the day below it closed below the 200, and then on this day it closed strongly above the 200, but it also took out these previous ranges, this fractal with two lower highs to the left, two lower highs to the right, and that's why I bought it. I did not like buying up here this high, so I only took a half position. So instead of a 10% position, I took a 5% position, which obviously I'm really grateful for. Most likely I will be stopping out of this. Even if it closes, this is such a big bar down. It shows a lot of distribution. There was some news today that came out about crude oil stocks were much higher than people thought, and that news is what hurt the sector. So almost 100% I'll be getting out of this unless we have some miracle close, which I don't foresee. But if we do, then I would stay in it. But at this point here, I would get out. But I'm thankful that I only took a half position. If the chart really doesn't look great to me, maybe it's a little too high or so forth, and I'm struggling about whether I want to be in it or not, I'll take a half position. And I find it's a pretty good rule. If you're not quite sure, but you don't want to be fully in it or you don't want to be full about it, taking a half position has really worked out well for me over the years. So this was a half position. I'm glad we will get out under the 200 day. Actually, we're just going to get out of this. XLRE, I bought that yesterday. I guess I should put my line here. I bought this yesterday because, we were moving up strongly, and then we had this big dip. We closed below the 50, and then we closed above the 50. The 50 is this gray line, and that by itself is a decent entry point because then I use the 50 as my stop. But on top of that, you see how this bar washed out this bar, and then yesterday it closed above that bar. That's a V2. See how it forms this little V here? So this bar took out day one. This is day one. Day two took out day one to the downside. Day three reversed and closed back above the close of day one. So it forms this V. It makes me feel more comfortable because the market has already tested this area here, and there were no more sellers there. People wanted to buy this area. So it doesn't mean that it can't go back down there, but in hindsight, it's nice to know that it has already tested it before you move forward. And as you can see, I bought it yesterday at 35.53, and it has moved up, and I have hit 2 profit targets so far today. So the question here is how I'm going to manage this going forward. Currently, we have a 50.83 RSI, and a reading over 50 indicates positive momentum. If this closes under 50 RSI today, I will just go ahead and lock in the profit and call it a one-day trade. If it closes above the 50, I will continue to keep it to see if it moves higher. But you see the RSI line down here? See how we're below the 50 is this middle line. We're below it. Now we're coming up. And whenever you have a moving average or RSI above you, when you're below and it's above you and you come up to it, there's a lot of times that will act as resistance. So that's why I'm keying off of the 50 RSI as my resistance. So long story short, if this closes below the 50 RSI, I will just go ahead, lock it in for a nice one-day gain. Okay, those are our only positions. Dexcom, XLE now, and XLRE. So let's take a look today. I want to show you, take a look here real quick. Yeah, I want to show you the earnings that are coming out today. What a massive day this is going to be. So please be careful about thinking about buying in front of these earnings. It literally is gambling. The price could, the move could already be priced in. I mean, look what we have. We have Facebook, we have Microsoft, we have Tesla, Visa, PayPal. That is a monster day, right? That's going to move the market in a big way. So, really be careful about holding through earnings. It can be wonderful or it can be devastating. And, the thing about when things are wonderful, that emboldens you to maybe buy more shares, get more risky. But if things go against you and you get destabilized and really depressed because you just got really beat up on because of a bad earnings on your position, that destabilizes you psychologically and you start to make bad decisions. Not everyone, but a lot of people start to make bad decisions. They kind of start beating themselves up. They're like, well, it can't go any lower than it is now. I'm just going to buy more. And it certainly can go lower. Things can always go lower. It doesn't, low prices make lower prices, and high prices kind of beget higher prices. So just don't think because it's low, it can't go down anymore. Don't ever think like that. If you just stop thinking like that, it will help your trading immensely. So best thing is just to wait, see what the earnings are, and then make a decision after that. I can tell you that the large institutional financial companies, they do not buy in front of earnings. They wait until earnings come out so they have some real data to make a good decision on whether or not they want to get involved in something. So, if you want to make money like a professional stock trader, do the things that professional stock traders do. So, okay, that's my rant, but it is important. And today is such a big earnings day that I thought I would try to kind of make that clear. Okay, so now let's go ahead. Hey, Bruce, how you doing? Yep, Boeing. We're going to get to Boeing in a second here on the watch list. Okay. All right. Okay, so those are our positions: Dexcom, XLE, XLRE, and looks like we're going to be getting out of XLRE. I'm sorry, we're going to be getting around XLE. Too many X's. All right. So here is Apple. Apple moved up again today. Now it's back down. This is a kangaroo tail. A kangaroo tail is where it opens, moves up really high, and then comes back down exactly to where it opened. So basically that just means that people were selling into this price range up here, which, it's not a great sign. So it's a 79.43 RSI. It's extremely high. I wouldn't be buying this, but a good trade on this would have been a close back above the 200. It's a nice, beautiful trade. So it's important to key off of that 200. And if you're a long-term investor, when the price is above the 200, be open-minded, stay in the trade. If it closes below the 200, get out. be impatient with your losses, but be patient with your wins. And you can see if you would have bought here, if it would have closed down below, you'd have taken a small loss. But if you would have had the strength to hold this, you would have done very, very well. It's too high for me. It's been great for a trend trader or a person that buys it over the 200-day moving average. Okay, Amgen. Amgen did get under the 30, back over the 30, and moved up nicely. But you see this big bar here? I'm not surprised at all that the price level got to the halfway of this big bar before it turned back down. So I'm not interested in Amgen. We would have to do a lot of work before I would get interested in Amgen. The nearest, the most probable trade on this in the future would be a close of the RSI under 30 and then back over. That might be a possibility, but it's not doing that now. So nothing on Amgen today. Amazon had a big bar yesterday, but today we've given about 5/8 of that back. This is a big bar. If the price closes below the halfway of this bar, that is slightly bearish. Not intraday, but I mean, if this closes up here above the halfway of this bar, it would be much more bullish than if we close below. If it closed below right now where it is, that would be somewhat bearish. But I'm not going to get involved in this trade. Earnings are tomorrow afternoon. This is a market leader. It's at 72.17 RSI. Interesting. If it closed below 70, you would have a lot of people selling that were waiting for a close below 70. So nothing on Amazon today. Here you go, Bruce. Here is Boeing. So the way Boeing reacted to earnings was initially it went up and then did reverse. It's a 46.13 RSI. For me to get interested in Boeing, I would need it to move sideways, close down below the 100, and then close back up using that 100 as my initial stop. That's if it went down. To the upside, if it got above this high here, this is a fractal, 2 lower highs to the left, 2 lower highs to the right. This would be a good entry point because one, we would go back over 50 on the RSI showing positive momentum. We would trigger a fractal by going above here. We would also move above these moving averages. So I've been watching this for several days, looking for this kind of trade. And this is a good time to point out, be patient with your trading. Look at these charts, and if you see a potential entry that happens a week in the future, 2 weeks in the future, just like I'm doing now, I'm not going to buy it here. There's no reason to buy it here. But if it goes down below here, or if it goes back above here, make a mental note of that or write it down and follow it each day and be disciplined and only take that trade if it does what you said it was, what it should do or what it could do in the future. I found that is a good way to go because you're not impatient at the moment. You're just saying in the future, if it does this or this, then I would enter a trade. And then in the future, if it does do that, then enter the trade. Always being careful with your position size, right? Not too much, maybe a 5%, maybe a 10% of your total capital. And then, adhere to your stops. That's the way you make money trading. So right here, right now, I'm not interested in it. Alibaba is down pretty substantially today. Oh, sorry, I thought that was 1.97%. It's down 1%, just a little over 1%. This is range bound right now. Yesterday it went back above all the moving averages, but today we're losing it. So if I were interested in Alibaba, this would have to move sideways for a couple days. Have the price go down below the 20-day moving average, reverse back up, give me a V1, give me a V2. That is what I would be looking for. So a V1, V2 below and then back above the 200, or a break below the 50 and bounce over the 50, or a bounce at the 50 would also be a good entry point for me here. Ooh, Caterpillar. So I assume the earnings were not that good, but you never know. They could have had good earnings, because sometimes you have good earnings, but the stock still goes down. So I didn't check to see what the earnings were, if they were good or bad, but all I know, and really all I care about, is how the market reacted to the earnings. So right now, this is a very large bar. This bar is actually this big because it closed there yesterday. So this is a very large bar. I don't really like to get involved in large bars when they're, a day or two from me taking an entry. So we'll just have to see how this works out. Possibly if it moves sideways, went down below the 50, then back up above the 50, that would be a good entry point to give me a good swing back to the upside and a very small loss to the downside. So hope that makes sense. Canopy growth, we talked about buying gaps. This gapped up. If you wanted to get into this trade, you could have done it at the close of the market using the low of this gap day as your stop. I decided not to do it, and obviously I wish I would have, because it moved up 10% the next day. But anyway, that's okay. You don't get them all, right? I mean, you're going to get some, but you're not going to get them all. And that's fine, because that's just part of trading. But where it's at right now, at the 63, and it's struggling with this third ATR channel here, I'm not interested in that either. The Dow we talked about, it's having a difficult time with that high RSI reading in that third ATR channel. Dexcom, we talked about that. It's a double bottom with a divergence, V1 entry, false breakout to the downside, close back in the range, and I am currently in this. If it closes back below this 10 today, I will lock in the profit. If it keeps moving up, I will continue to phase and then tighten up my stop with a closer trailing stop. For example, the 10-day moving average here, the 20-day moving average here. eBay. That is a breakout, right? That is a nice breakout. It's a 67, almost 68 RSI. If I were a breakout buyer, I'd be buying that, but I'm really not, especially not at that high RSI and being up here next to this third ATR channel. If you were to buy it, if you were a breakout buyer, where would you put your stop? So you could put your stop at a close back below the previous range, so a close back into here. But generally on these big gap up, I would use the low of the gap up day as my stop. But that is a long way, right? And we know with risk to reward that you don't want to take 1-to-1 risk to rewards. You want to take minimum 2-to-1, right? So you have 2 times the profit target, 2 times the profit compared to the loss. So if this is your loss range, you've got to be about double that up to here. So to really make the math work on this trade, you kind of have to target up here. And I don't know if it's going to get up there, especially being that we have the 70 RSI. We're close to a 70 RSI, and we have the third ATR channel up here. So I'm just not going to take that trade. I hope for any of you that have that, it keeps going up. But for me, I'm just going to pass on this trade. Okay, Etsy. Now, this could be a possible trade today. Possible. We were in a nice uptrend, and we've had quite a dip back. But a lot of times when you are in a nice uptrend and get extended from the 50-day moving average, you will bounce at the 50-day moving average. Not all the time. But currently, you can see we closed below the 50. Now we're back over the 50. Let me talk a little bit about higher lows. Higher lows are something that I really have a lot of faith in and that I use a lot. If I have 2 stocks and they're both lining up and they look good, I am going to take the one that has a higher low. But right here, we don't have a higher low. See how these lows are lower? So a close back above the 50, then using the 50 as your stop it would be okay, especially with a half position, would probably be the way to go. But for me to take a full position on this, I would like to see this close up above the 50, down below the 50, and then move up again, because the people that bought here, the people lucky enough to buy here, they're going to be looking to lock in their profits here. So the bad news is that will probably cause it to move down. The good news is the people that bought here and sold here, they're out of the equation now. So you don't have that selling pressure anymore. So I'll mark this here as a possibility. I don't know. I certainly a half position at the most, but we'll swing back and we'll look at that. Facebook has reversed 69 RSI, so it has earnings today, right? Yeah. Oh boy, I'm getting behind on time. I've been jabbering too much. Okay, 5 below, just too high. Swiss franc bounced a little today. Certainly is low, but I don't think I would be interested in the Swiss franc unless we got back above the 30 RSI at this point, or a double bottom. Gold is having a pretty good day there. We broke to the downside, reversed up, but we're at a 38 RSI. The thing I don't like about this is if it gets to 50, that gives us 12 points, but we have to, if we get back to 30 RSI, we lose 8. So it's a little better than 1-to-1, but I'm just going to let this go. Google has reversed. It's too high. Notice that it's held halfway of this bar. Goldman Sachs, it had that big move up. It's moving down. If it moves sidewards and then we had a V1, V2 entry, I might look at a deep dip there. Also, probably a dip to the 50-day. I would be interested in Goldman Sachs at the 50-day if it got there. All right, let me check a couple things. Okay, HCA, boo, big day today. It's running into the 50 RSI here. This is pretty much where I think it would move back down, so I'm not interested in HCA. IBB is the biotechnology. This was a good dip buy here. It's rallied, but a lot of times when you have these big down days and then you rally, you're still in a downtrend. This is just a counter trend rally. So I wouldn't be surprised if this comes back down. So I wouldn't be interested in that. Intel is up a little today. It's up in that high range, has earnings coming up soon. So I'm not going to be interested in buying that. IWM, I am interested in buying this today. I didn't buy it yesterday when we closed back above because it didn't prove that it got above this high. If it closes above this particular high here today, I will be taking it. Actually, let me just do a little math. So 227, yeah. So 115 and 240. Okay, I have to do some math there. Okay, so I would be interested in buying the IWM if it closes here above this particular range. It's a 60 RSI. It's a little high, but still within the values that allow me to take a trade. Johnson & Johnson, just all over the place, range bound. Coca-Cola, I did buy Coca-Cola back here on the 9th when it closed above the 50-day moving average, and it tested the 200-day moving average several times before that. I rode that from here up to here. I exited the day before earnings, but it was a nice trade from here to here and phased out along the way. Lockheed Martin had a big day. Actually, I did also buy Lockheed Martin here, and I phased out up to here. And then I got out, and then it did rally a couple more days. and then on earnings it had a huge day. So for me to be interested in Lockheed Martin, it would have to come back into this range, ideally back to here, or ideally back to there. But right here it's just too high. MasterCard having another big day up. I've mentioned a couple times I'm concerned about MasterCard because we go high, we go higher, we go higher, and each time we go higher, you see how our MACD is just going down. See how we're much higher than here and here. We should have a lot higher bars, but we're not. And you can see the slope of the MACD bars here is in a downtrend, right? I mean, there's no doubt this is in a downtrend as this is going up. So it doesn't necessarily mean it's just going to go down, but if it does have a big move down, people see these readings, and I believe that that would cause a lot of people to jump in, maybe to the short side, or at the very least just to get out of their positions. So there is earnings coming up, but I'm not interested in this here. Okay, MO, you can see it is closing currently as it is right now. It's above the 200-day, but I don't like that there's huge big bar is in its recent past. Plus we have earnings, so no interest in Altria. Merck, I did buy Merck here on the 18th of this month when it went down below the 200, closed back above, and the 200 also coincided with this sixth ATR channel. I phased out here, and then I phased out here. This was a 2-day trade. I got out here at the end of the day because we went from under 30 on the RSI over 30 and then closed under 30 yesterday. So it was a good trade. What was that? 1.9. Yeah. It was close to a 2% trade in 2 days, and I just went ahead and took it. I'm looking for another test of the 200 now again. Microsoft has earnings today, right? Am I asking you, or am I speaking to myself? Yeah, it's today after. Netflix had a big move up. I almost bought this here, but I decided not to. And then it continued to move up, but it's down today. I would be looking for a buy somewhere probably in the halfway range of this large bar. So just want to be patient and wait for something down in here. Okay, Nike. I did buy Nike here when we went above this previous high when the moving averages started fanning out. MACD went positive, and I went from here to here, scaled out the entire way. The reason I got out here was because we went over 70 intraday and then closed below 70, and you can see that was a good time to get out because it immediately went down. We're going back up today, but who knows what will happen. But that was a good trade. Philip Morris, boy, you know, we had this huge bar here. Nothing. This has to settle down for a while. It's at a 40.58 RSI. You know, I would be looking to buy this down here at the 200-day moving average if it gets down there. And if it does, we will have a low RSI, maybe a 33 RSI at the same time we have a confluence with the 200-day. That would be a good entry point. So this is one of those ones, you know, mark down, watch Philip Morris in the future at the 200. So if we get down to this range, I most likely will be buying it. PayPal. We had a dip down, move back up. Currently it's a lower high than this. Don't know which way this is going to go. Has earnings anyway today. The Qs, we talked about it. It's just very high. It's been a great trend trade. But once this trend changes, all the people that are trend trading are going to get out. So, you know, just looking into my crystal ball into the future, I do see some large bars in the future. Don't know when they're going to come, but I do see some large bars. Silver had a nice rally today. I would not be interested in silver until one, it at least got over the 200-day moving average, or two, we had the 5-day moving average crossing over 20. That's a legitimate, profitable, back-tested trend trading approach on silver, and it cuts out a lot of the noise. So that's what I would be waiting for. At the very least, a close back above the 200 with a nice strong move, strong break, or a 520 cross to the upside. S&P, pretty much unchanged. I think they're just waiting for earnings, but again, we're at a 72 RSI. We have a bullish divergence happening here, a bearish divergence, excuse me. We're going higher and higher and higher, yet the momentum is going lower and lower and lower, which is not generally a good sign. Square, it did have a big bounce here at the bottom, but you know, this 200-day, see how this 200-day acted as support all this time, stayed above this 200-day. Then when it finally broke down, now that this used to be support, now it is resistance above. See how as we started to move closer to the 200-day, it rejected it. So, I mean, I'm not saying it won't go back up, but I would, for me to get interested in Square, it would very least would have to close above the 200, or we'd have to have a 520 cross above, I'm sorry, a 520 moving average cross. That would also get me along. But if that happens, we'll be above the 200 as well. Whew, look at AT&T. Big day on earnings. So, you know, this is a good reminder of what not to gamble on earnings. We've seen a few of them go up recently, but don't think just because a few of them went up, they're all going to go up, because that is not going to happen. Big day today. You know, if the bar settles down, starts making some lower range bars, some more narrow bars, goes below the 200 and the back over, that would be a good risk to reward there for me. I don't know if we'll get there or not. I think there's a good chance, maybe with some follow through possibly tomorrow, who knows. But if I were looking for AT&T, I would be looking for a close under the 200 and back over. TLT, this looks pretty good. We went down, you know, we had rallied quite strongly. We've moved down, we've moved down to a upward sloping 50-day moving average. I was waiting for it to close under and then back over, but I never got it. But today, we did close back in the channel. The green lines are the channel. We did take out this fractal. Here's a high with two lows below it, two lower highs to the left, two lower highs to the right. And this is a pretty strong bar that not only moved above all the moving average symbols. Yeah, Bruce, 200 on AT&T. That's what I just talked about exactly. So I am going to go ahead and enter this trade today because we triggered this fractal. We bounced off of the 250. We moved over all the moving averages. We're back in the channel. RSI is above 50, 53, 53. So I will definitely be buying TLT today, unless it closes very low. Not sure. So on the docket currently is TLT. And also IWM, if it closes in the correct space, in the correct spot. All right, have to do my math. Okay. All right, what else we have? What time we have? All right, we have about 17 minutes. Tesla has earnings after the market today. So we'll see what happens. UNG just continues its downward move. You know, I imagine eventually it will find a bottom, but who knows? We will see what happens, but I do not want to get involved in this. The first place I would get involved in this would be a close above the 30 RSI. That would be the closest entry signal that I can imagine, but it's not there. And even if I did buy it there, it would probably just be a 2 or 3 day bounce. United Healthcare, you know, had this big sell-off. Now we've come back up. I think in most cases you're going to see some consolidation here, moving sideways or a move back down. It has not been able to get over the 50 RSI. See how the 50 RSI has acted as resistance here, acted as resistance here, and now we're getting back close to the 50 RSI again. Not quite. It'd probably have to come up into here, but I'm not good. I wouldn't be buying this here. Oil had to move down because of the large crude draw. Lack of large crude draw, so I would not be interested in that. First entry place I'd be interested on oil would probably be down here at this upward sloping 20. Dollar had a big day up, big day. It's at 68.53, so probably at some point today it got above 70 and then lost it. So if I were in the dollar, I would probably be getting out here if it closed under the 70. Visa has earnings, right? Yeah, Visa has earnings today, so I'm definitely not going to get involved in that. The VIX, you know, the VIX is interesting here. See how we closed below the third ATR channel? And then yesterday we closed below the 30 RSI. Well, today, you see this V2? See how we had this down bar day one, day two washes out, day one's low. Day three looks like it's going to close above day one's close. So you have a lot of confluences of signals there. You have a V2 signal here. You have a close back up into over the third ATR channel. You went under 30, over 30. I am going to buy a position in VIX today due to this setup. So I'm probably going to buy a half position. The VIX VXXB tends to move, is much more volatile than the rest of the market. So buying a half position for me is like buying a full position. But this is a good signal here. My stop would be simply a close under the 30 RSI, giving me a tight stop to the downside and a good potential to probably up here for my profit. So I am going to buy VIX. Verizon, nothing going on there. Energy Select, definitely going to get out of that today because we bought here over this fractal and it closed back above, but that news just destroyed it today. So we'll be getting out of that. Consumer, staples, nothing much there. Real estate, I do have, if it closes under the 50, I will be getting out. We did hit 2 profit targets. So currently right now it looks like it's going to hold. Healthcare, again, we had that big dip. We've had a bit of a rally. It's stalled out a little bit here. Not interested in that. And transports, holy smokes. Look at transports today. Unbelievable. Probably had a lot to do with the oil prices going down. Boy, that's amazing. Would have been a good buy over the 200. Okay, so that is the list. And let's take a look. Boy, Etsy. Yeah, I think I'm gonna give Etsy one more day before I jump into this. I mean, it does look like it might close over the 50-day moving average. It's not over the 50 RSI, and we've come from a lower low. So what I'd really like to happen is it to go up, come back down, make a higher low from this low, and then go back up. All right, Russell, if it closes above this particular line here, I am going to buy that. Oh, give me 1 second here. Okay. So I'll have to watch that closely. SLV, I'm not buying that. So to me right now, it looks like IWM if it closes there, and TLT for sure. So what I'm going to do right now in this last 10 minutes, I'm not going to be able to speak as much because I'm going to have to place these trades over several accounts. So appreciate your patience. I will, after I'm done with all these trades, I will definitely start discussing this again, and then we'll do some questions and answers. So think about if you have any questions or answers you like, or questions that you have, and I will try to answer them after the market closes. So I trade several accounts that I have to make these multiple trades in. So I'm going to go ahead. I'm just going to speak out loud as I'm doing this. So I am getting rid of my XLE because that's a loser, and it's like a weed in my garden. And I want to keep my garden free of weeds, and losing trades are weeds to me. Okay, so we are out of XLE. XLRE, we're going to have to watch that. We're going to have to watch and see if that closes under the 50 RSI, because that would be my signal to get out of that. TLT looks strong. I'm going to go ahead and buy TLT right now in multiple accounts, so bear with me. Okay.
Order filled.
All right. We got it in one account. Now let's get it in the other account. Okay, so we've taken care of XLE and got out of that losing trade. We have entered into TLT. Now we have to go back to the Russell. Ooh, currently it's underneath now. Currently it's underneath. And then our other positions, Dexcom is fine. XLE we got out of. XLRE, it's getting pretty close. It's getting pretty close to that 50 RSI. So I guess we just should give it a few seconds here before I make that decision. So yeah, these are all on the bubble. I would not buy IWM right now, right where it's at. So we did take care of TLT. All right. 123.53 is where we got into that, right where it's at. All right, so that's my entry point. And you know, a good question here would be, where is your stop? So right now, the stop for me would be a close below the 20-day, which equates to the low of today's bar. So yeah, that will be my initial stop. As we start to move up, I will start to trail it. So all right, so we are in, let me just make sure. Yeah, we're in TLT there. And we're at TLT there. I am going to buy a position in VIX. Okay. Let me do that over here. And I'm going to take a half position because VIX is still volatile. Okay, that's taken care of. We have 6 minutes. Okay. XLRE is hanging, so we are going to be just waiting on that. IWM. Oy, oy, oy. That's so close. That is so close. Let's look and see what that did intraday. It's had a pretty big bar in that last 39 minute. Yeah, Bruce, I did buy VIX. Yeah, that Etsy's, that's a tough one. Over the 20 for sure. Over the 20 minimum. Well, I'll tell you what. Let's go ahead and get our VIX. Let's go ahead and get our SPY taken care of, because we may have to make some last second decisions here. So I need to get some of this off my table. So I'm going to go ahead, buy my SPY position for the overnight SPY trade that I do every day. Okay. That is now taken care of. We have our SPY. And where did we enter our SPY at? 292.45. Okay. 292.45. So that's for our overnight SPY position. All right. IWM, it's right there on the bubble. TLT we bought. And Etsy is the only other potential. Yeah. And then XLRE. So I'm going to go ahead and get XLRE chambered up here just in case I do have to lock it in, and my stop there is a close below the 50 RSI, and it's right on the bubble. So I'm going to wait as long as I can until the close of the market. And before I have to make that decision. So it always gets a little tense here these last few minutes, and just a quick tip, make sure you understand your trading platform and how to get to things, to do it quickly if you have to, so that you don't freeze. Do it while the market is not open, and put yourself through a test to see how quick you can get to this screen, move over here, do this, do that. I've done this for so long that I'm pretty good at it, and I do it in several accounts, so it makes it 3 times as hard, but it's fine. But have things written down so that in crunch time, exactly what to do. Just look what you wrote down. Sell this below this, buy this above this, so forth and so on. All right, so we have about 1.5 minutes left. So what I'm really keying off here right now is XLRE. That's about the only move that we have to make. Let's see. Yeah, it's still hanging above 50. All right, we're in the final minute. Boy, this is going to be big earnings after the bell is going to be unbelievably big. All right, so XLRE looks like it's holding. IWM does not look like it's going to close back above there, so I am not going to buy it. VIX is moving up nicely, so that was good. And it looks like XLRE is going to be fine. All right, so it looks like we're set. We have Dexcom still. We did buy SPY at the end of the day. We bought bonds today, and we still have XLRE, and we also bought VIX. So
order cancelled.
Yeah, well, I did have a positive day today, just barely, but it is a green day, so I am grateful for that. Anytime you have a green day, you should be happy about it. All right, so does anyone have any questions for me on anything that I did today, or if you would like me to take a look at any chart, maybe one of the ones that we don't look at very often? If you do, just type it into the chat and I'm happy to answer that. I do want to mention that I do offer private one-on-one teaching and coaching via Skype in the evening time. So, if you feel like that would benefit you to do something one-on-one with me as far as teaching, please let me know. My hourly rates and my contact information are in the description of this video, so you can just email me there and get a hold of me there. William says, what value or range do you prefer the RSI to be at when taking positions near the moving averages? Well, that's a good question. It depends whether or not it's moving up or down, but for instance, if the price was above the 50 RSI and it was above the 50-day moving average, if the price moved down and hit a confluence of the 50-day moving average and the 50 RSI, that would be a double confirmation, right? That's two different indicators that would show that there's support. Now, with the 200-day, it's going to be not impossible, but it's a little tough to get a reading of a 50 RSI at the same time you're at a 200 SMA. But one of the best signals that I like is when you have a confluence of the price coming down to the 200-day moving average at the same time it's at a 30 RSI. So that's what concerns me right now about the market to the upside, is because we have a high reading of 70 at the same time you're up at the third ATR channel. So, as far as RSI goes, there's three RSI levels that are important to me: a 30, a 50, and a 70. And so if I can get a confluence of a 50-day moving average at the same time it dovetails with the 50-day RSI, I like that. Or if price is at a 200-day SMA at the same time it's at a 30 RSI, I like that also. But if you were long and you bought under the 200-day moving average and then it moved up to the 200-day moving average above you at the same time it was like a 70 RSI, that would concern me. So, William, does that help? Bruce says, do ladies enjoy trading stocks? I had dinner with Dr. Alexander Elder, and we were talking about how many more women are coming into the trading field. And he is a psychiatrist, and he said, I really think that women are going to do well in trading because I feel like they're better rule followers than men. And, it's important to follow rules when you're trading. A lot of time, us guys, our testosterone gets in the way, and that hurts us. So I think you're going to see a lot more females in the trading world, and I think they're going to do really, really well. Okay, you bet, William. If you have any other questions, please let me know. But yeah, I think, I went to a trading conference and everyone was just talking about how many more females attended this conference. And so good for them. I think they're going to do very well in trading. I think they follow the rules better than us guys do, and that is a big advantage in trading. So are there any charts anyone would like me to look at all? I'm just going to check CNBC and see if we have any kind of earnings announcements so far. Nothing yet. Okay. Have a good hike. Do you use any other indicators to confirm your buy signals like the MACD? Yes, William, I do. And actually this weekend, I'm planning on doing a video specifically on all the tools of the trade that I use. But you know, specifically, if we look over here at my chart, you know, I'm going to go through this in detail when I make the video. But my mainstays are the 200-day moving average, which is the black, the 100-day moving average, which is the red, the 50-day moving average, which is the gray, the 20-day EMA, which is the blue, the 10-day EMA, which is the red, and the 5-day EMA, which is the kind of the turquoise. Then I use my ATR channels. And then I use my MACD histogram and my MACD lines, the RSI and the volume. But yes, I rely on MACD a lot. I'll give you an example, William. This was the Nike trade that I took back on the 12th of April. And you've seen this before, but why did I buy this? Well, I bought this because we moved back over the range of that previous high, which is a fractal. We were not overbought on the RSI. We were, I can't remember exactly, I think maybe we're a 55 RSI. But at the same time, William, to see how we had the MACD crossover at the same time. So I had three important things that were happening there. A nice close above this previous range, a nice strong bar. Oh, four things: high volume, and at the same time, the MACD crossed over. So TLT, let's see, what was it the other day? Oh, these were all dip buys. Yeah. But yes, I look at MACD very carefully, William. I always do. It's one of my main indicators. It's one of my confirming indicators. You know, if I had two particular stocks that I was looking to buy and like they were almost identical, but one had the MACD crossing and one did not, I would certainly go with the particular stock where the MACD was crossing. The more indicators that you can get to come together with a confluence at the same time, definitely the better. It's difficult to get any one particular indicator to work by itself in the market. My feeling and my experience in 23 years of doing this is I just look for confluences. And if I like a trade and it doesn't have a lot of confluences, but I still want to get into trade, I will take a half position. But I rarely take a full position on anything unless there are, at least two or three indicators that all line up together. I want to have the perfect storm, perfect positive storm. So does that help, William? Okay. Well, I hope it did. All right, everybody. Well, I think that is a wrap. It'd be interesting to see what the market does tomorrow with all these earnings. So anyway, thank you so much for stopping by today. If you enjoyed this, I'd appreciate if you'd give me a thumbs up, and if you would be able to share this with some of your friends that might have an interest in this, maybe want to learn a little bit about trading, and if also sharing it on social media. And if you have not subscribed to the channel, I would appreciate you doing that as well. So, okay, on the way out here, we've got to do the U.S. government required disclaimer again. But anyway, that was a wrap. It was fun. Thank you, and I hope you tune in tomorrow in real time during the last hour of the market tomorrow on Thursday, and we'll do it all again. Okay, have a good rest of your day, and thanks for tuning in. See you tomorrow.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.